Back to the charts with Big Boss Crypto, and today we will look at the macro environment of the US dollar dominance index, the potential Bitcoin bottom area that will form soon during the big and upcoming Shmita crash, and the best potential targets to begin your DCA into your favorite coins so that you are prepared for the generational opportunity of a lifetime to buy the best assets for cheap. So, without further ado, let's look at the charts. So, in case you didn't tune into the FOMC speech yesterday, Jerome Powell confirmed that a 0.75% lending rate hike will occur, which is not surprising as we have been expecting a rate hike to begin the domino effect of the upcoming Shmita crash, which is only days away. And if you want to learn more about the Shmita cycle crashes, please look at the video on screen to learn more. And now, looking at the charts of the DXY, we can see that it has now claimed the 0.76 level as support if we go on to the daily time frame right here. It has now been a previous resistance area that has now turned to a support area. And we can see on the monthly time frame that we have a big double bottom pattern occurring. And now that we have crossed the 0.786 level, we will begin marching on to our potential top targets up in the area below, up above here, between 128.804 to 144.599, which of course is bearish for Bitcoin and all of the crypto market, as the DXY will soon pump impulsively up to that area, which consists of the golden pocket fib level targets, which is between 128.804 to 132.753. And we got that golden pocket area by measuring our Fibonacci retracement tool from the 1980s high down to the 2009 lows. And we have our impulsive targets of the 1.272 fib at 134.708 and 141.853, which is measured from the 2001 DXY highs. And this is why we believe that the DXY will top around that area, but we believe that it will most probably top around the golden pocket Fibonacci level area between 128 and 132, as the golden pocket Fibonacci area is usually the biggest resistance rejection area where price reverses in all kinds of assets, not only the DXY, but also for cryptos and the stocks as well, if you look on any time frame. But anyway, we have seen the golden pocket resistance area be a historically big rejection area, as we can see on the weekly time frame on both the 2016 level right here, where the DXY tapped into the golden pocket area and then began a big move down, which of course between 2016 and 17 was the big bull market for Bitcoin and other cryptos, as well as then in 2020 when it just tapped the golden pocket area, and then we had a big bull run of 2020 and 2021 for both crypto and stocks. And looking at Bitcoin, as we have previously stated, we believe that the marked area below will be where the potential bottom might be formed, as we have a trend-based fib target drawn from the April high to the summer lows to the all-time high, and we have our 1.618 trend-based Fibonacci target to 10,672.72. And if we take our regular Fibonacci retracement tool, which is from the summer lows to the all-time high. All right. Price is currently hovering around the 1.272 impulsive fib target, and we believe it will prepare for another leg down to our 1.414 target at 12,164.27, as well as potentially head even down to our 1.618 target, which is at 3,964.49. Okay. And also on the weekly time frame, we have something called a unfilled weekly green vector candle. And what that means, and that we have stated before, is that it's a price area basically where we have lots of liquidity and price gaps as well, which is waiting to be filled by the big institutional traders, by the big whales, etc., so that they can get access to that liquidity and basically fill up their bags and prepare for the next bull run after we are through with this nasty correction. And as I've stated before, A crash down to these price areas might seem crazy and unthinkable for Bitcoin. After all, we've been through this year already. But we have to remember, as I stated before, that in the end, Bitcoin is a highly volatile asset that experiences both the best gains, much better than traditional stock markets, but also the hardest drops as well, unfortunately. And we are right now in a macroeconomic period where people need to make sure they can pay their bills and save money. So right now, cash is king, and it's named the US dollar. So don't be surprised if we will head down to these targets soon. And in turn, Bitcoin and the other cryptocurrency coins is following the traditional stock market price action. Now, we have taken a look many times before at both the S&P and the Dow Jones index bottom targets many times, namely the box below right here for both the Dow Jones and the S&P right here. But regardless, we can take a look at it once again through the multiple confidence factors one more time to prove to you that this is a reasonable bottom. So firstly, if we take our trend-based fib targets from the February 2020 high to the March 2020 lows to the all-time high, we have our golden pocket target, 1.618 target of roughly 18,580.39. Right. And if we take our regular Fibonacci tool from the 2009 lows to the all-time high, like that. And we have our golden pocket target between 18,114 to 16,834, as well as our 0.702 target at 15,553. All right. And we are on the monthly time frame right now, and we're on the white line. We roughly have the 200 EMA as support, where the big institutions look a lot at 200 EMA for filling in their orders, as well as on the weekly time frame with the 800 EMA being right above our area. And both the 200 and 800 EMA are areas of interest for the big institutions and whales. And lastly, on the weekly time frame, we have an unfilled weekly green vector candle. Like I said before for Bitcoin, with this indicator below, this is an area where the big institutions and whales are interested to fill in their orders, like as we can see right here on this March 2020 low right here, where there's lots of liquidity unfilled, where the big institutions, like think of BlackRock, think of the other big whales that really want to access to that liquidity so they can fill in their orders and prepare for the next bull run, essentially. And from a correction basis, if we compare it to other corrections before, like 2008 financial crisis and dot-com bubble, the crashes usually are range between 40 to 60% percentage rise, a drop from the all-time high. So if we measure from our all-time high on the Dow Jones to our area below of interest, we get roughly a 40 to 60% drop there as well. So with all these confidence factors, we strongly believe that this will be our bottom target. And we will personally begin to DCA into our favorite projects and cryptocurrency coins like Chainlink, like HBAR, Quant, XRP, etc., where we are real excited to begin DCA when we reach these targets. And like we said before, this is not financial advice. This is only for educational training purposes only, and only you personally can make your calls if in what projects you want to invest in, essentially. But regardless, we personally believe that this is where a generational bottom will be formed for an absolutely insane bull run after this nasty correction is over. And remember that opportunity will never feel like opportunity. Just like in 2009 bottom, if we look right here, after this nasty crash in 2007 and 8 to 2009 right here, just imagine if you bought in 2009 lows, just look at the amazing gains that were ahead if you bought back then. And this is where we personally believe that we will see an even bigger investment opportunity coming up soon after this nasty crash. So in conclusion, the key takeaways from this video are the following. We have a nasty crash on crypto and stocks, which is imminent, and after 0.75% lending rate hike by the Feds, this will kickstart a domino effect that will begin soon with the big nasty crash. And the most likely top for the DX5, which we have covered, will be in between 128.804 to 144.599. The S&P will probably bottom around 2,413 to 1,904, and for Dow Jones in between 80,580 to 15,553. And these serve as great confidence factors when we begin to near these targets for to DCA personally. But once again, this is not financial advice. And when we did our technical analysis on Bitcoin, which follows the traditional stock market, but from our TA, it will probably crash further to at least 10,672.72 and will bottom in between that price to 3,964.49 US dollars. And finally, we believe that this is a generational bottom that will form after this nasty crash is over for an insane bull run to begin. That's all from me. Thank you so much for your time. Leave a like, subscribe if you enjoyed the video, or a dislike if you didn't. Please stay strong and stay safe in this rough macroeconomic period we are in right now. Have a wonderful day. Big Boss out.